Hi, welcome to this video, day 23rd of June. It's Sunday. We're just going to give our update outlook for the Japanese yen. Look at it against the USD. We're also going to look at it against two commodity currencies, the AUD and the CAD. In this video, I'm not going to be looking at Euro JPY, which is another JPY pair I'm really interested in. The reason for this is I covered it in a video yesterday when I looked at Euro USD, so you can check out my view of Euro JPY there. Now, in terms of regular viewers will know, the yen has been the currency we've been really focused on as a long-term trend. We're very bullish of the yen, and the yen has done really well for us over the last few weeks. Now, I do, however, feel that there could be a pullback coming in the yen. So I'm just basically going to go through managing the open trades if you have them on, and also getting in on long yen trades if we do have a bounce against the yen or on continuation of the existing bull trend. Now, in terms of the charts, we're going to go and take a look at them right now, but please do keep in mind, it is my view as of this moment in time. It can change in line with the market conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 forex pairs, you can click on the link beneath this video, get live access to our member center. And the chart setup we're going to do first is going to be USDJPY. It's on USDJPY daily, and in terms of my technical levels, I'll do them in a moment. Now, in terms of just anyone new watching our videos, we're just basically very bullish of the yen longer term, but in the short term, I think the possibility of a correction is high. I think there'll be a selling opportunity. Now, I'm going to cover it in terms of new entries and also for anyone who has the trade, because there's a reasonable open profit on it. We obviously don't want to give it back. Now, in terms of behind the chart, let's look at the long-term yen fundamentals. Just out and out bullish. Weekly targets remain the same, 104. Then the power level. So still 700 odd pips to go on the downside longer term. Okay. Again, very briefly for anyone new to our videos, we're so bullish of the yen. It's just got big money flow on its side. It's also got a huge capital account surplus, or current account surplus, my apologies. Domestic investors are bringing their money home. Bit of caution about what's going on in the global economy. Businesses are pulling their money back as well. Japanese, the biggest overseas investors in the world. Got an improving economy in Japan. GDP, CPI moving up a bit. Stimulus will be curtailed, which has been a major problem for the yen in the past. It's the most oversold major currency long term. It's going to play catch up. It's done a little bit. It's got more to do. In the short term, GBP is the most oversold, but yen just still very, very oversold in historical terms. So long-term bullish of the yen, but short-term, USD looks oversold. Okay, the market after the Fed last week, pricing in 5 rate cuts through to mid-2020. You're seeing 5 rate cuts. One is in the market size 100% discounted for July. The Fed dot plot though shows none for 2019 at all. Okay, market's got 2 penciled in. Now, the reason the market's selling the USD off so hard is I think the caution in the Fed statement. The Fed were cautious. They said, they would adjust their policy. And, they could cut rates. Of course they could. But this moment in time, they're just saying they're watching and waiting. So the USD, the fall, not just on the yen, but generally has been pretty severe. So some counter trend action is likely. Now, in terms of what interests me on the chart is what the smart money is doing. When we were up here trying to get through 112, the smart money was really, really short, and that encouraged us to go short. So we sold through this 20-day moving average. We always wanted to give way if we're looking for a big trend. So we got in at 111.40, and just look how the 20-day moving average holds the price. 3 touches nearly, and then a big fall. I personally think we could gravitate back to the 20-day moving average to correct oversold. Now, obviously, if you're in the trade, 111.40 in, 107.31 You got just around 400 pips profit. Don't want to give it all back, but yeah, we want to stay with the long-term trend. So what can we do? Well, my own view is I'll come for new entries into this trade in a moment. There's a trajectory which obviously lines up with the 20-day moving average. Now, where is first level resistance? Well, first level resistance is going to be a round number. It's going to be 108. Okay. Then the second level is obviously going to be the 20-day moving average. So there's the second level resistance. Okay, so just the 20-day moving average will move down if price moves up, of course, but level 1, level 2. If you're in the trade, my recommendation, and I'll update the Member Central Monday, I'll probably look to take 50% off the table. Okay, so liquidate 50% trade, leave the other 50% run, and then bring the stop down to 108.80. Okay, so well clear of second level resistance. So basically, now the trade is in half. It's 150 pips distance, isn't it? So lose 75, which is no big deal, okay, in the big scheme of things. Then you have the option to put the 50% back in. Now, in terms of new trades and putting the 50% back in, how would you do it? Well, you've got a kind of indecision candle. It looks like a little bit of exhaustion on Friday at the outer Bollinger Band. Look at what happens up to 108. If we fade into 108, just sell off the level. We go through 108, wait to sell back through 107.80. Okay. Now, if we were to break lower, you could actually come through 107, but make sure well clear of the number. So 106.80. Okay. Remember these targets, a long way to run on the downside. So coming in fresh, just look and see what we do up to this level here. Through it, back through it, or it fades, come off it. What actually would happen if, let's say, prices just ran onto the upside and sliced out our stop? Well, you'd have 109 as resistance. I think that'd be pretty tough to take out. You just sell back through the 20-day moving average. And yes, sometimes in big trends, you've got to be sensible with stops. If you get stopped out, you can immediately come back in. Yeah, we did that with EURJPY. Literally came back in at the level we went out at. It didn't run on too far to the upside, just come back in on weakness. For me, it's a good long-term trend. A little bit cautious. And, so I'm not sure if I mentioned that. Smart money is covered out nearly all their shorts at 108.50, which is a warning of a rally, okay? I don't think it's going to be a trend-changing rally, but a decent rally could come. So be cautious. If you're in the trade, basically protect. If you're not in the trade, the rally, in my view, will be a decent selling opportunity. So that's the way I view USDJPY, and you obviously track what I do daily in the member section. Let's have a look at the commodity currencies, AUDJPY and CADJPY very quickly. All right, just the last two charts very quickly from our member center, and I'm going to do AUDJPY first, and this one really does show the benefits of long-term trend following. It's been a really good downtrend, and I still think it's going to continue. Here, smart money very short, above 80, just coming at 79.80, snap of the 20-day moving average, down. Brief touch, got through it briefly, but misses our stop, and then down again. The move down is, what is it? It's about 540 pips, isn't it? So much bigger fall than USDJPY. That's just a reflection of the Aussie dollar as a weak currency. Much weaker than the US dollar. If you look what's going on in Australia, the economy is slowing. China's slowing up. That's impacting on Australia. They cut rates recently. They're going to cut them again. I don't see much of a bounce. In terms of we're in the trade, you could take half off, and then look to sell a bounce or a break lower, and that's what you could do if you're coming in fresh. Selling a break lower, I'd come through 73.80, so well clear of that tail and the round number, or just sell back to the 20-day moving average and look for weakness up at 75. Obviously, if it powers on, you'd sell back through 75, okay? Stop here. Yeah, we've got it at 75.80 behind the second level. If we get run, 76 then should hold the rally. We just look to sell back through the 20-day moving average. Just don't see much upside. And, there is a tendency, I think, for all of us, me included, when you get a nice big downtrend, to think it might end soon. You always think that. But this one, if I look at the fundamentals behind the chart, it's got far further to run. Longer term, I'm looking for monthly support at 60. Okay, so 1400 pips lower than where we are now. That's longer term, but I see no reason really to be anything other than bearish of the Aussie and see any rally just basically as being minor and as a sell. Now, in terms of CADJPY, this one hasn't given us much at all, actually. I thought it would give us more. We did get about 100 pips on the way down, but kind of messed up that trade in my view. Now we're in at 81.50 and we're at the level we sold at. Now, I've mentioned this in two videos at the weekend. I did one on the GBP where I was saying the CAD was the most overbought major in the short term, and also one where I did USD CAD. It is. And yeah, it really has got to have it up there. A long way to go on the downside when it breaks. I think it's pricing all the good news it can. And if you're coming in fresh to this trade, there's nothing to do if you're in the trade right now because it's not making any money. But if you're coming in fresh to the trade, I would sell it through the mid or just wait to get through 81 and then see if she runs. I've got a monthly support level at 70 that I'm targeting. Had a lot of good news recently, but it can't get through and up to the 82 level yet. I just don't think it's going to do so. I mean, if I did get stopped out, sell back probably through 82, we'll have to see how this one runs. This one, like I said, I thought it'd go down far quicker and in a sort of smoother fashion. But markets are there to surprise you, I suppose. We'll see. But I think a break of 81, stop behind 82, target 70 longer term. We'll see. Obviously, AUDJPY, similar sort of view, going a long way to the downside. I think the Euro's kind of at its bounce already. You can look at my view on that in the video I did on the Euro generally. But yeah, for us, the JPY, still a long way to go. In the longer term, still remains very bullish. So we'll see. The new week probably bring some surprises, I'm assuming. But I'm just pretty confident of the yen long trades still. So we'll see what happens. Thank you very much for watching me. As usual, take care and have a good day.